Welcome back to the channel, guys. I'm your host, Buckning, and today we're gonna give you the end of the week update. We're gonna show you our buys that we made, and we just continue to buy regardless of what's going on. Today was looking good, but it looks like it just dropped off. Not exactly sure why. I didn't dig too deep into it. It's just been a busy day. We'll get right into it, guys. If you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So for the end of the week here, the portfolio is closing out at $11,537.53, down a whopping $197.35, down 1.68%. For the 1 week, we're down $415.53, down 3.48%. For the 1 month, down $466.42, down 3.89%. For 3 months, we are down $339.82, down 2.86%. For the 1 year, we're up $1,046.05, up 9.97%. For the all, we're up $1,699.01, up 17.27%. Currently in the cash account, we have $33.33. Consecutive repeating numbers, not consecutive, but repeating numbers is somewhat of good luck, I think. But as you can see, just red day, another red day. It's fine for the most part. Hurts a little bit, but it's fine. So some of the purchases that we made were Bank of Nova Scotia. We purchased 2 of these shares. Ticker symbol for this one's BNS, closing out at 81.35, down 77 cents on the day, down 0.94%. We now have 14 shares, total position value of $1,138.90. Average price of getting in is $71.38, and it holds about 9.9% of the portfolio, which is great. Down $11.48 today, but our total return since owning the position is $139.54, up 13.96%. As you can see here, like I said, we purchased 2 shares at a price of $82.47, coming with a total of $164.94. 82, so about a bit higher than what it was, but still getting it in there. As we do every time we make a purchase, we do purchase a fractional share of VFV, which is down as well today. VFV is the Vanguard S&P 500 Index ETF, closing out today at 94.10, down $3.30 on the day, down 3.39%. Total position value of $402.33. Average price of getting in is $99.39. Holds about 3.5% of the portfolio. And our total return since owning the position is down $22.64, down 5.33%. If we go down here, you can see the fractional share. We were able to purchase 0.2635 of a share at $94.87, coming to a total of $25 Canadian. So that's the overall portfolio there. And at the end of the week performance. But we will head over to trackyourdividends.com to give you guys the update on how we're doing. As you can see here, portfolio today. If you're to build the portfolio exactly as it stands without the updated positions, you're looking at a 3.55% return on your money, on your capital invested. When it comes to our yield on cost, we're looking at 4.2%. Which is slightly higher, about 0.5% higher than what you would have due to dollar cost averaging. So there is always a benefit to dollar cost averaging. And what I mean is to consistently buy time over time. As they would say in the overused cliche, you want to buy the dip. Except I don't know how you still have money to buy the dip because it just keeps on dipping. So as you can see here, portfolio last week or even today valued at 11,278. I think that's a bit off, but let's talk about the annual income. We were not over $400 last week, but it looks like there was maybe a dividend increase of some sort. So you look at that, annual income from dividends is $401. So we'll go ahead and add a holding. First one we can add is Bank of Nova Scotia.to. We purchased 2 shares today at a cost basis of $82.47. Go ahead and add that to the portfolio. A little bit of a slight change there, and we'll add one more, which is VFV.to. Close this ad. We did not purchase 2 shares. We had purchased 0.2635 of a share at a cost basis of 94.8728 at that holding. And here we are. So if you're to build the portfolio as it stands today with the updated positions, you can see here 3.57% of a yield on the updated positions. If you were to build the portfolio as it stands today, as you can see here, our yield on cost is 4.21%. And then our annual income has gone up to $409 for the year. Of course, split quarterly. If we take a look at Bank of Nova Scotia here, we now have 14 shares. You can see the annual income from dividends is $56. Yield on cost for us is 5.6. Today's yield closing out at 4.92. VFV, same thing. We now have 4.28 of a share. You can see here, yield is 1.17, and our yield on cost is 1.11%, and our annual income is 4.71. Not 4.71, $4.71. As you can see here, we are lagging behind when it comes to May. Looks like we have the lowest dividend, but everything seems to be equaling out. So May will be a low income month for dividends, but that's totally fine. So that's the portfolio there on trackyourdividends.com. We will now talk about ShareSite, which is tracking the performance of the portfolio. So I've already updated this one. You can see here capital gains. We are down $513.64, down 4.30%. But dividends, I don't think this will ever be a negative number. We have totaled $132.75, up 1.11%. Currency gain from foreign exchange, because we do hold some US positions in here. We have $42.06, up 0.35%. But our total return with everything included, dividends and all, is down $338.83, down 2.84%, which is okay. I'm not too happy about it, but hopefully we can just flatline and not dip anymore. And the way we combat that is to continually flood money into the portfolio to make sure we don't have dips. Sometimes not the greatest idea, because like I said, when it just keeps on dipping, are we still going to even have money to keep on buying the dips? So that is the portfolio there, guys. We'll head over to back here and we'll just talk a little bit about why I continue to buy even with the dips. As we know, because we can consistently buy, if you're having troubles trying to figure out how you can find the dollars to keep on investing in and buying the dips, because eventually you probably will run out of funds to buy the dips because it just keeps on dipping, just revisit your budget. Take a look at where your money's going, or even just prepare your battle chest, because I'm sure you're deploying it as much as you possibly can. I'm not selling. I think it's silly to sell when times are down. I feel like sometimes the mindset is not to buy low and sell high. It seems to sell when the market's going down and buy when the market keeps going up. And we want to try and do the opposite, because it can be tough. You just got to be able to tough through it, have the fortitude, and honestly, that's why I'll just keep on buying. I'm not. It does suck, and I do talk about it, and it does for a lot of people maybe strike fear, because you can only buy so much when it keeps on dipping. Eventually, you just got to stop if you can, because if you buy the one dip and then it dips again, it keeps on dipping. You just keep double, triple dipping, and no one likes double dippers when it comes to chips and dip. So just trying to make light of the situation, but that is pretty much it for the video, guys. I don't have much to talk about other than obviously do your own due diligence, do your research. I know I think it was Amazon that had a rough earnings call as well. Not much to talk about on there because I don't own any Amazon stock. I'm just building this portfolio, building the battle chest for the Google split, because I'll definitely be getting in there, because I'm sure we all know the value of Google in that sense. Some positions I'm down over 60% in other portfolios. So I am feeling the heat when it comes to the market downturn, especially in the tech sector. It is what it is. And I'll just keep on doing what I'm doing. And I hope you can continue to do what you do. Maybe if you're a little bit aggressive with the purchasing amount, maybe dial it back a little bit if you can't deploy that cash, you got to deploy it other places, because the world is just a mess right now when it comes to cost of living, inflation, and so on and so forth. So I won't keep you guys any longer. So hopefully you guys did enjoy the video. Have a great weekend, and we'll see you in the next one when we talk about how much dividends I received for the month of April 2022. And that'll be a good one. So have a great weekend, and we'll see you in the next one. Bye.